Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets so you can clearly see what we see in the global landscape. As I talked last week, we see the unemployment numbers obviously getting better. Unemployment's actually dropped down to 7%. Now, while some may argue that people have left the workforce, generally speaking, new actual jobs are being added and better quality jobs. GDP growth in our economy and around the world is also getting better, in addition to unemployment in other countries outside the U.S. I firmly believe we're going to add additional gains in the month of December, although we're off to obviously an incredible year for 2013 already. As we go into 2014, again, we'll continue to run our relative strength screening. We'll be in those areas that are relatively stronger. This year, we haven't made a lot of changes in the last few months because, again, the small and mid-cap arena have been quite strong. We're going to see how that's going to pan out as we get through the month of December. One of the areas that we've had a number of questions about is, what do I think about emerging markets? Well, we've added emerging market back to our portfolio because it ran into our relative strength screener, jumped into the top 5 a few months back. Now, while any investment sector can have a little bit of a seesaw, emerging markets, generally speaking, have been relatively strong. They have ranked better than other sectors that we track. And one of the things that is interesting with emerging market economies overall and their markets, many of these are down 10, 15, and 20% year to date. While we missed that big loss at Resney Wealth Management, we added them back after that loss was actually made in the emerging markets and when they started to become relatively strong again. So while we haven't made much on our emerging market exposure yet, we'll see what happens as we get through December, and we'll see if those emerging market exposures continue to be held within the global tactical portfolios at Resney Wealth Management. If I look at pure valuation on the emerging markets, many of the emerging market economies are actually trading at valuations about half of what the U.S. is. So on a risk-reward ratio, on a valuation metric, emerging markets look compelling, but again, relative strength is an important aspect of return. We're looking at those areas closely, and of course we will update our clients of any significant changes we make within client portfolios. One of the areas that I want to stress again is on the bond side. We continue to be inundated with calls from non-clients on our radio, our TV show, and of course emails and so on into our offices. People that are, again, overloaded on bonds or the wrong kinds of fixed income in their portfolio. I'm glad to say at Resney Wealth Management we are on the right side of the income area of bonds, which is primarily floating rate securities, and they've actually done quite well. I continue to see more weakness in bonds, especially long dated and intermediate term dated. And one of the things that's interesting is we're starting to see the 10-year Treasury pushing close to back to that 3% level we saw just a few months ago. This spells more disaster and more pain for the fixed income investor. It's probably going to take another year or two before the fixed income investor finally bails after, of course, they've had significant losses on a lot of their fixed income portfolio. And then at that point, they're going to look at probably re-entering some of the equity-based markets. Of course, this is wrong, but again, if you don't run a strict strategy, which includes risk management, the average investor basically chases what used to be hot only to be soured if we do have another recession. For recessionary calls, we're seeing zero in the current economic scenario. In fact, we're seeing improvement across almost every metric for recessionary indicators, meaning there's no recession imminent for at least 6 months out, and that's about as far out as you can look for a recession. We're seeing improvement. Job market, GDP, generally speaking, consumer debt. We are seeing improvements not only in the U.S. but across the board. This, in my opinion, will bode well for future possibilities for gain in various sectors that are relatively stronger. Of course, if you're a client, you have a question, send us your question or call our office. If you're not a client and you're realizing there is a difference, call our office for a consultation. We'd love to help you with your portfolio. We always like taking on new clients who are nice people to do business with. Make sure you have yourself a safe and profitable week.